channel, his Twitter page. I'll be putting all the links at the bottom of this video, so it'll be easy to get over to all his stuff. David, welcome to the Spotlight.
Thank you. I really appreciate it from one Dave to another. And as a fan of the X22 report, it is a pleasure and an honor to be here.
No, the honor is mine, and thank you for being on here and taking the time to come on here to give us your perspective on what's going on in the economy, in the world. And I wanted to start off just by giving the audience some information on you and what you've been doing, who you are, and pretty much just a little bit about you. So go ahead.
Thank you. I appreciate that. Yeah, I have a YouTube channel called Looking at the Markets. And for a couple of years now, a number of newsletter companies have approached me, and I've chosen to be with PortfolioWealthGlobal.com. They are the #1 free financial newsletter in 2017 for their cryptocurrency calls. They called Ethereum at 15, Litecoin at 25, Dash at 35, Cardano at around 4 cents. So they've made some amazing calls, and I said to myself, I got to align myself with Portfolio Wealth Global. It's also a free newsletter. That's what I like about it as well. It was founded by Tom Beck, who became a real estate multimillionaire at age 33. And his core values are the same as mine, which is that the government's getting too big. People need to know what's going on behind the scenes. The central banks are just doing whatever the heck they want. And people need to know how to prepare and position themselves, both money-wise and just generally speaking. And so I'm very proud to be able to bring this education to people.
Fantastic. Now, you mentioned the central banks, and I wanted to ask you, do you think the central banks have a huge role in the stock market, or do you think the stock market is free and open and everyone's just trading on the market and there's no, central bank behind the scenes?
Yeah, I'm glad you asked about the Fed, the central bank. I'll be honest with you. I believe that the Fed is lying to everyone, which you may or may not agree with that. But, Tom Beck, who, again, is, the founder of PortfolioWealthGlobal.com, has made a very contrarian call. He believes that the Wall Street consensus is false as usual. He believes the Fed is just outright lying, and the prices of all assets, including the stocks, will change once investors realize that. Now, the big lie is that they're saying they can raise interest rates to 3.5% or 4%. There are tools to stop inflation that are very limited, because if inflation keeps going up, they won't be able to raise interest rates to more than 3%. Otherwise, they'll send the entire economy, including the stock market, into an insane recession. So for right now, they're just hoping that what they're doing is going to work. And we've seen their experiments before with the Fed. We've had this experiment since 2008 with the zero interest rate policy, and in some regions of the world, negative interest rate policy. And we see how this has worked out for savers, retirees, investors. They've been the victim of this experiment. And now, finally, the Fed, with the regime change, has been starting to normalize rates. And this has victims in the form of savers, retirees, 401ks, IRAs, 403bs, just getting decimated. People who already own bonds they're going to see the value just go down and down and down. And we're covering this in the newsletter that Tom Beck has been talking about. Actually, we have a free report if people want to check that out at PortfolioWealthGlobal.com/bonds. That's /bonds. And it goes into more detail than I can tell you right now about what's going on, what's going to continue happening in the bond market, how that's going to affect your stocks and my stocks, and what you can do about it, how you can get better rates, 8 to 12%, for example, much more safely and without having to rely on the promise of the Fed, of the government, and of the stock market.
Now, I just wanted to continue on the line of this interest rate hike. Now, a lot of people talk about it. You hear it in the corporate media, and the central bank, the new Fed press, came out and said, we're going to be raising the rates maybe, 3-4 times this year. Now, when they raise the rates and they And I think you just said that when they start raising the rates, it's not going to help the economy. It's going to actually make the economy weaker or destroy the economy. I mean, if they know this, why did they decide to start raising rates?
Yeah, well, again, it's a regime change. It was Janet Yellen before, as we all know, and now it's Jerome Powell. But, it almost doesn't matter who is in charge. We have to look at what has been the result of this normalization. They brought the rates down to almost nothing, lending money to the banks for basically nothing. Boy, I wish they would do that for you and me. How about loaning money to the regular guy and the regular gal for free? Okay, zero interest rates, negative interest rates. They're not going to do that for us. They will do that for the big banks. All right. Now they have to start to normalize interest rates. This is changing, and as we know, when normalization happens with interest rates, what that does is it puts bonds in danger of suffering brutal losses. Nominally, your coupon payments stay the same with each passing year, but if inflation goes up, which I believe it will go up to about 4 to 7% in the coming months and years, and Portfolio Wealth Global sees these inflation rates skyrocketing by 2023 year after year, your purchasing power in the bonds that you already own in your IRA, 401k, or just in your portfolio goes down. This has been going on for a number of years. I believe it's been planned. I believe that the central banks knew exactly what they were doing. They're going to continue to do it, and the regular investor is going to be the victim of it. And that's why we have to self-educate. Everything they do benefits the banks, the people, the moneyed people, and the moneyed institutions. And the regular investor is going to be the victim unless we do our own research, don't believe everything you hear, and make your own decisions. And that's why we put out this type of education in Portfolio Wealth Global.
So if the interest rates are moving up and the U.S. is running a record deficit spending, we have a huge amount of debt, not just here in the United States, but globally. I mean, what will this do to the bond market? What will this do to the stock market? I mean, can both of these continually do well? Can the stock market continually move up, or are we going to have major problems in both of these?
Yeah, well, we've had quite a calm market in 2016, 2017. I spoke about regime changes. It seems that whichever invisible hands were in charge in 2016, 2017 just wanted to have the stock market go up gently. The VIX went under 9 a number of times in the past 2 years, which is crazy, a crazy lack of volatility. And now if you've been paying attention, as I'm sure you have, to the stock market, to the S&P 500 and the major indices in the last few weeks, there's been massive volatility. 2% moves in the S&P 500 on a daily basis. Yeah, that's not normal. That's and not only is it a correction that we had in February, this is overcorrection. And according to Tom Beck, yes, we will see volatility. However, don't be mistaken. The bull market is not over. It's just a major correction that was due to happen. You can't have just a bull market that goes up forever. Now, if you take into consideration the tax cuts and the guidance from reporting companies, most of them are breaking records. Okay, so stocks, yes, there will be volatility. Stocks will they'll chop around in a range for now, but I believe they'll gather up some steam and they'll rally probably in around 6 to 7 weeks. Yes, I know this is a contrarian view, but not enough investors have been duped into buying stocks yet. I believe there's going to be another head fake, as they call it. If you want more information on this, the listeners can go to portfoliowealthglobal.com/crash. That's /crash. And there's some research that everybody can have access to on where stocks may be going and whether we're seeing the top right now or will in the near term.
So I wanted to throw on top of all this, what's happening with Facebook, Google, Twitter. These are the FANG stocks. And we know that the Swiss National Bank, they've been purchasing a lot of these stocks, pumping up the stock market. Now, we know that Facebook has been falling. The stock has been falling. And we know this is going to affect other tech companies What effect is this going to have on the stock market if these stocks start to tank?
Yeah, it's all about breadth. You want participation. You want widespread participation, let's say in the S&P 500. If the S&P 500 goes up, but it's only based on a few stocks going up a lot, and you mentioned a few names that could be responsible for that: Facebook, Google, the FANG stocks, Amazon. Right now, Amazon's getting beaten up because of a certain person making certain tweets. But is it just getting beaten up because of that, or because perhaps the PE ratio is in the hundreds and it's just gone up so much, so fast? Corrections are going to happen. Trees don't grow to heaven, as they say. And that's true of Facebook. And another issue with Facebook, by the way, not just that the PE ratio might be too high, it might have just gone up too much, too consistently, too fast, but also there's a question of trust. Right now, do people trust Zuckerberg? Do people trust Facebook with their information, with their data? There is a backlash going on. So that's going to play into it as well. Privacy concerns are an issue. It seems like we're all giving away, sometimes I talk about the deep state. People ask me about the deep state. Do you believe that they're watching us? The deep state, if it exists, they don't even have to wiretap us anymore, because most of us are going on Facebook and freely, of our own volition, telling the world where we are, who our friends are, what we're doing, what is our relationship status and all that stuff. And we have pictures of it to prove it. And in case that's not enough, we're all using our cell phones. They can ping that and find out where we are. We go to Target and they ask for our credit card number, and we slide the card through the machine, give it to them freely, and then they ask for our email address and we give it up to them. Don't even think about it. We don't ask why or just say no. So, there's a backlash against all these things, and there's a correction and normalization in stocks. I'd like to see greater breadth in the stock market. If I see the S&P going up, I want to see more stocks participating, not just the FANGs, but all of them. It remains to be seen how this is going to play out. But right now, I believe that the correction that's going on and has been going on since February is long overdue, and it could be a healthy thing.
I mean, how far do you think this correction is going? How far down do you think it's going to go? This correction that you're saying. Do you think it's going to be like 10% more, 5% more, 20% more?
No, I don't believe so. I think it'll be range bound for a little while, choppy. It's choppy right now. Yes, we did see a 10% correction, but that's nothing. I mean, that's normal. For people who just got into stocks, that it probably was scary while it was happening. They had what's called vol-apocalypse, where the VIX, the volatility index, went up massively in a short period of time. There was a day when the S&P 500 went down a little bit over 4%. We haven't seen that in a long, long time. So yes, that's scary looking. That doesn't mean we're going to crash. Doesn't mean we're even going to go down another 10%. I don't believe so. I think we're going to be range bound. We're just seeing more volatility. We're seeing more 1 to 2% or greater up and down days in the S&Ps, in the Qs or the NASDAQ, in the Dow. This is not normal, but it's all head fakes. Again, I see a rally happening in 6 to 7 weeks. It's contrarian, but that's how I feel about it.
Now, we also have China. They're pushing their petro yuan. The futures market went live, the 26th of March. And we can see there's a lot of countries moving towards the petro yuan, moving away from the dollar. Is this going to hurt the dollar in the long run?
Well, 63% of the world's currency is the US dollar. Now, that's 6 out of 10. And only 1 out of 100 is the yuan, the Chinese yuan. So the yuan has a long way to go. Yes, it's true. China wants to open the Chinese market to compete with the New York and London markets. I believe the next phase for the US dollar is going to change the way we invest. And Tom Beck from Portfolio Wealth Global will be talking about this and reporting on it in April and May. So people want to continue to check out the newsletter on the homepage there. But just to give a little bit of background, the current global standards for the oil trade are the Brent futures, which are traded in London, and WTI, West Texas Intermediate, which is traded in New York. And yes, China launched those yuan-denominated oil futures contracts on Monday, March 26. So now both foreign and domestic investors can trade on the Chinese commodities futures markets. I believe this is the latest in a series of steps by China to raise the world profile of the petro-yuan. It's clearly an attack on the hegemony of the petrodollar, and Xi Jinping would love to see the yuan replace the dollar as the world's reserve currency. No doubt about that. But for now, it's just more curiosity than actual interest in participating in the petro-yuan futures contracts. And old habits are hard to break. People are accustomed to trading crude oil in U.S. dollars. But over time, this could be the beginning of the end for dollar's hegemony. And whether it's the yuan, the euro, or something else, it would not surprise me at all to see the dollar get replaced sooner or later as the basis of international trade.
I just wanted to go down this path of the dollar being replaced. Now, if this does, or when it does happen, what happens here in the U.S.? What changes if the dollar is replaced as the reserve currency?
Yeah, and some people would love to see that. Now, Dave, I'm sure you've seen HR 5404, the bill that has been.
I was going to mention that.
Yep. That is recently. I recently put out a video on looking at the markets, my YouTube channel, about that. I was surprised at how many people didn't know about it, so I just had to report on that. There's a bill going through Congress. It has not passed the House or the Senate. Has not gotten to the president's desk yet. So, but we can hope though, which would, if passed, put the dollar back on the gold standard. We've been off the gold standard since 1971, when President Nixon took us off.
Position of the American dollar as a pillar of monetary stability around the world. In the past 7 years, there's been an average of one international monetary crisis every year. Now, who gains from these crises? Not the working man, not the investor, not the real producers of wealth. The gainers are the international money speculators. Because they thrive on crises, they help to create them. In recent weeks, the speculators have been waging an all-out war on the American dollar. The strength of a nation's currency is based on the strength of that nation's economy. And the American economy is by far the strongest in the world. Accordingly, I have directed the Secretary of the Treasury to take the action necessary to defend the dollar against the speculators. I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interest of the United States.
Although some people put the year at 1913, when the Federal Reserve was established, some people put the year at 1933, when we got off the gold standard. Either way, we've been off the gold standard for a long time. And we've seen the results of that. Currently, the U.S. dollar is at near a 3-year low. Last year in 2017, the dollar fell by around 10% against the currencies of its trading partners. That's 10% in 1 year. Horrendous. And with the government continuing to print money like there's no tomorrow and inflation very likely to rise, personally, I expect it to reach between 4 and 7%. In the coming years. And the dollar is not a safe haven anymore. The old saying that cash is king, no, it hasn't been for a long time. And as central banks, as we discussed, normalize their monetary policy, I think we can only expect more pain ahead for the U.S. dollar. In addition to that, the debt to GDP ratio in the United States is now at more than 100%. That's pathetic. So the value of any currency is based on trust, on the trust in the government, on trust in the stability of the nation's economy. So it would not surprise me at all to see the dollar lose its status as the world's reserve currency. So, yeah, I see more pain ahead for the dollar.
So if this bill or another bill gets through, what changes if they hook gold to the dollar now? I mean, right now we have gold and silver. The ratio stands at 82-1. And, gold, many people have been saying it's been suppressed by the central banking system where it's not allowed to move anywhere. I mean, what do we see changing? Is anything going to be repriced? Is anything going to change?
I think this could be a boost for the dollar and the gold. If we could restore some faith in the dollar, that could be, if HR 5404 passes, then we could possibly restore some faith in the dollar. And I imagine it would be a huge boost for gold. I'm a big fan of gold and silver. You mentioned the gold-silver ratio. Well, in terms of purchasing power, holding gold and silver over currencies has absolutely been the best option. Gold and silver, to me, are the ideal safe haven asset and the ultimate form of money. Yes, there was some pain with precious metals, but then there was a bear market, but finally we started to see some relief in 2016 as the gold and silver prices came back up. Currently, gold is in the 1300s. We've got silver in the 16s. I think it's a great deal. I just spoke actually with Tom Beck before we went on the air. We talked about how now Wall Street funds have to reshuffle their portfolios, and we believe that soon Wall Street will start covering their shorts in the gold miners. And I believe they'll have a field day like they did back in 2016. And we've written an analysis of that at portfoliowealthglobal.com/gold playbook. That's /gold playbook. And according to our proprietary systems, the gold miners might actually join the bull market in a matter of weeks. It will be as powerful as shoving a basketball into a garden hose. There's a nice visual for you. I think it'll be very brief and surprising and probably be quick and pass like the blink of an eye. So that's why in the next 2 weeks, Tom's going to reveal his number one gold stock for 2018, the most undervalued gold stock in the world, according to how we quantify our stocks. So we're going to reveal that before April 15th, tax day. But meanwhile, there's the report, and people can always subscribe to the newsletter for that information.
Now, the gold and silver ratio, which we just mentioned, which is 82-1, is this normal, or is this something that we haven't seen before?
Yeah, thank you for asking that. Great question. It's happened 4 times since 1971 when the United States took the dollar off of the gold standard. So it is a rare thing. And after that happens, it might be a good time to rebalance your portfolio in terms of how much physical silver and gold you have. If you have both gold and silver, the physical stuff, which I highly recommend having some in one's portfolio because they're great hedges as well as great investments, great stores of value. What tends to happen is that the value of silver tends to go up compared to gold. So there's some mean reversion back to a gold silver ratio of around 50. Usually I'm not saying it's going to happen tomorrow or next week, but it's not a bad time to rebalance the gold silver ratio in your portfolio, meaning perhaps sell some of the gold and replace that with some silver. Just be aware that silver, I like to consider silver like gold's more volatile little brother. Okay. So yeah, silver is a mover. It tends to follow gold, but make bigger moves. So if you're going to play silver, just be aware that there's going to be a little bit more volatility, but I think it's as good at a time as any to get into physical silver.
Now, in the beginning, we mentioned about interest rates moving up. Now, how does this affect gold and silver if interest rates continually move up?
Yeah, well, there tends to be an inverse relation because if bonds become worth less and less, the bonds that people own, and if people start to lose trust in those bonds, because when people own bonds and the value goes down, people don't want bonds as much. They're just not worth as much. And that happens with normalization of rates, of coupon rates or bond yields. The bond market is just toxic right now, is what I'm getting at. It wouldn't surprise me at all if bonds cratered by around 50%. And so what we have to look for is alternative investments. And so that should benefit gold, silver, and other precious metals. And it doesn't just have to be gold or silver. I'm a fan of zinc as well. Keith Neumeyer, I'm sure you know who he is. I'm sure many of your listeners do. Mr. Silver himself has taken a position in a zinc company. And zinc, after gold and silver, zinc is the third most in-demand metal, believe it or not. I think it's underappreciated and undervalued. There's actually a company, if I can mention it, it's Zinc One Resources. That's Zinc One Resources. And again, Keith Neumeyer owns it or has a position in it. JP Morgan and other banks are starting to look at it. There are fewer than 8 pure play zinc companies. that are, most of them are not even worth looking at because they're speculative. But I like Zinc One a lot. They own 2 projects in Peru, which is my favorite South American jurisdiction for miners. And it's such a well-developed area, and they really respect the profession over there. Again, if people want to check out these reports, they're all free of charge. Tom Beck wrote a report at portfoliowealthglobal.com/zinc riches. That's /zinc riches. And people can learn about the, what's the ticker symbol? How can they get involved with Zinc One resources if they want to do that?
Now, you mentioned alternative investments. What about the crypto market? What do you think about the crypto? I mean, it's crashing right now, and it's people are saying, oh, the bubble has, popped and it's time to get out and it's never going to rebound. And a lot of people think that this is like a central bank trick where they created the crypto market, or the NSA created the crypto market. I just wanted to get your take on where you think the crypto market is going, and is it still something that people should get into or not get into?
Yeah, great question. Cryptocurrencies have crashed 30% or more 11 times already. This is the 12th time. It's down about 70%. I remember it peaked I'm talking about Bitcoin here in particular, because the other cryptos tend to follow Bitcoin. So it's crashing around 70% now, but we've been there before. We've been here. We've done that. For people who are just getting into Bitcoin or other cryptocurrencies right around when it peaked at around 19,500, almost 20,000. And then just to see it go down to 7,000, yeah, this probably seems like the end of the world. Probably feels that way. But for those of us who've been into the crypto space since 2009 or around then, when the mysterious Satoshi Nakamoto brought Bitcoin to the world, we've seen this before. And so it's probably less scary. And I think that cryptocurrencies will survive this. And I believe that we will see all-time highs once again. Now, cryptocurrencies, I don't believe they're in a traditional bear market. I don't think this will last for years. And on the other hand, let it be said that cryptocurrencies will not replace gold. I get asked that a lot. Gold is a real store of value, and cryptocurrencies are not just meant for that. They're just not meant for that. They're meant for investing, trading, making big gains in a short amount of time, hopefully, and as a transfer of funds, a transfer of money. Look, the discussion of cryptocurrencies versus gold is not really an issue anymore. There's no reason to compare cryptocurrencies and Bitcoin to a 5,000-year-old safe haven asset like gold. You really need to compare them to other technologies instead. But I am bullish generally on cryptocurrencies. You just have to have the patience, stay in the trade, and hodl, as they say, hold on for dear life if you're serious about this, if you're more than just a trader, if you're a real investor.
Do you think the cryptocurrencies will be backed by gold and silver? Do you think that's a possibility?
It certainly is a possibility. Again, I'm bullish on cryptocurrencies generally. Yeah, I don't even know if that's necessary for them to be backed by gold and silver. I believe cryptocurrencies will receive a boost when certain things happen, and it doesn't have to be backing by gold and silver. For example, when Wall Street starts diverting clients' money into cryptocurrencies, I think that'll give cryptos a huge boost. When central banks start buying cryptocurrencies for their own reserves, I think that will happen. I think that'll drive the price up. And perhaps most importantly, when technology will be able to create a way for the different blockchains, the blockchain of Ethereum, the blockchain of Bitcoin, Litecoin, and so on, to talk with each other, so to speak. When they can interconnect the various blockchains of the different cryptocurrencies, I think that'll propel the price of cryptocurrencies in a big way when they're interconnected like that. Yes, could they be backed by gold and silver? That certainly could happen, but I believe that other drivers will happen probably in the near term.
Do you think the central banks, just like they demonized gold, where they say, it's a barbarous relic, they did the same thing with cryptocurrency? Terrorists use it, it's criminals use it. It looks like they're doing the same exact method of demonizing both of these at the same time to basically to force people away from them. Are they that nervous about gold and silver and cryptocurrencies? Are they afraid that this might take over their fiat system?
Yeah, it's a direct competitor. These are all threats. Gold, silver, cryptocurrencies are all threats to the fiat hegemony and the dollar. The central banks, of course, would love to see, bonds and the dollar be everyone's investment of choice. But it doesn't have to be that way. At Portfolio Wealth Global, we like to educate people that there are alternative investments. There are other ways to get yield, real yield, safe yield, and we don't have to rely on the promise of the government, the promise of the central banks, not just in the United States, but globally, all the central banks. They've all made these promises to investors, and we've seen the decimation of portfolios, of 401ks, IRAs, that kind of thing, retirement accounts. And you don't have to watch your dollar deteriorate by keeping in cash just because you're afraid. Will there be a market crash at some point? Of course, at some point. Does that mean you have to stay in bonds? You have to stay in cash? No. You can have some physical gold and silver in your portfolio. You can have some cryptocurrencies in your portfolio. You don't have to put the whole thing in. I don't recommend putting everything into one thing. Of course not. But these are all viable alternatives. And certain powers that be don't want us to know that. They don't want us to see this. But, too bad, so sad. At X22, I know you're putting out the education that we do need to think for ourselves, and we do need to not necessarily believe that the central banks and the government have our best interests in mind. I certainly don't believe that. Portfolio Wealth Global certainly doesn't believe that, and so we're going to keep putting out the education on a daily basis.
Is there a certain, maybe you know the answer or you don't want to give the answer, or you do want to give the answer, is there a certain percentage that people should be holding, like when it comes to gold, silver, cryptocurrencies? A lot of people ask me this.
I recommend, let's say, if you have 20%, I don't think that's excessive. If you want to go more, you certainly can. 25%. Precious metals, nothing wrong with that. Anything more than that, you might be going a little too heavy because, remember, these things can also go into a bear market. We saw until 2016, we saw a bear market in precious metals, and it is painful. So you don't want to go too heavily into anything. But I'll tell you what. If bonds and stocks crash, you want to have something that's going to not be correlated to those assets. And so a sizable but reasonable position in gold, silver, and other precious metals, as well as some of the miners, if you want to go in that direction, which, we have reports on that at portfoliowealthglobal.com, and we also report on that in the newsletter. You can certainly take a position in that, and you'll feel a little bit better, at least, if and when things do go haywire in the stock market, in the bonds market. A little bit of cryptos, a little bit of precious metals. It's a hedge and it's an investment. It's consistent. It's safe. And especially with the precious metals, again, they've been around for millennia. So it's not going away anytime soon. It helps you sleep at night.
So from everything that we've discussed, what is your outlook moving forward? I mean, we have the president pushing tariffs, reciprocal taxes. We have China with the petro yuan. We have bills that are being introduced for backing the dollar with gold. We have other states like Wyoming, Texas, and other states that are also pushing bills or laws where they're saying that we need to have gold as a currency. And we see bonds, stock market, interest rates, it's all happening at the same time. What is your outlook moving forward?
The outlook is caution. Rocky roads ahead. And again, I think they're going to sucker in some more investors and traders out there, the retail guys, mostly guys and gals, who believe that because we've gone up since the stock market has gone up since 2009, therefore it must continue going up. They're going to head fake us one more time, I believe, and then all bets are off. We can't just have. It's not sustainable. We can't have stocks go up forever. Just like we couldn't have bonds go, the yields go to zero and stay there forever. There has to be normalization. There has to be correction. There has to be a reversion to the mean. People who say, oh, well, this time it's different. I think we know how that attitude ends up. History doesn't repeat itself, but it does rhyme. And there will be crashes. There will be major corrections. I think things will go haywire sooner or later. I'm not here to pinpoint an exact day. Anybody who tries to predict the exact day, minute, and hour that it will happen, that's not something I believe in. Top calling down to the minute doesn't usually work. But we have to find ways to gain yield that are consistent and that are safe from the ravages of the stock market, from the ravages of the bond market. We talked about precious metals. We talked about alternative investments to precious metals. We talked about cryptocurrencies. These are some ways to get in. And that's why I'm trying to educate people about these safer ways, better ways to get yield. And by the way, I know I put out a number of links, a number of special reports. I'm going to make it easier for people. We actually aggregated all of our reports at one page, and that's portfoliowealthglobal.com/money. That's /money. People can go there and check out all the reports, so they don't have to learn about or visit, a half a dozen different web pages. So I thought I would do that.
Dave, thank you very much for being on the X22 Report Spotlight. And I'll take that link and I'll put it at the bottom of the video. Once again, how can people see all your work and what you do?
Wonderful. Well, again, I'm at portfoliowealthglobal.com. You'll see me wherever the internet is. But people can also visit me if you go to YouTube and type in Looking at the Markets or David Moadel, Moadel. You'll find me there. Feel free to visit me also on Twitter, StockTwits, Facebook, LinkedIn, so on. It's at David Moadel.
David, once again, thank you for being on the Spotlight. I appreciate it.
Thank you, sir. Hope to be back again soon.
Yes.